Hey, it's Clay at ClayTrader.com. This will be a live trade video where I try to capture some of my trades as they play out live. A couple quick clarifications. Number one, I am day trading futures. And if you don't know what futures are, I'll put a link down below to a totally free 4-part series that'll walk you through the futures market and how it all works. But futures are awesome, and that's kind of what I'm going to show you one little avenue of in this video, if I do it right, which I should be able to. But also, second point, I am trading futures through a prop firm. What is a prop firm? How does a prop firm work? Which prop firm am I using? You can find all that at the link up at the top of the screen. But in a nutshell, a prop firm is a way for you to put very little of your capital at risk, and then you have a whole lot of upside potential. But right now, to kind of give a quick little status update, I've already been trading, and I am up already $950. But one of the things I want to just point out about that's pretty cool about the futures market and why I really like it, and do some live trading with it, is there are different types of contracts. So it's kind of like options, you're trading contracts, but these contracts don't have theta involved with them. So for any options day traders that are listening, like, wait, did you say no theta? That's exactly what I said. But anyways, you trade contracts. But I don't know, about 5 years ago, as of the recording of this video, the futures market came up with something called micros. So they're essentially the same patterns, the same charts, but you can trade them in different ways. So right now, this 950 came from what are known as NQ contracts. And these are the ones that are more volatile. They're very, they can, like I said, that 950, believe it or not, was thrown in my pocket in, I don't know, maybe 4 or 5 seconds. That I understand if you don't believe me, totally get it. But anybody that does trade futures, you know that NQs can add up quickly. But the point being, those contracts, very, very volatile within the P&L. But there's also something called the MNQ, and that is what I am right now, is the MNQ, and the M stands for the micro NQ, meaning they're not going to add up as much. So this is a give and take, right? Because sure, if you nail a trade, you're not going to make as much, but if you're wrong, you're also not going to lose as much. So what's nice about futures is if you get yourself a nice, solid green day, but you want to keep trading, there is a very straightforward way to keep on trading, but not really be at risk of giving back your gains. I would have to try really, really hard and make some really bad decisions if I were to give up, $950, because of if I now move to the micros, I can still keep trading, but in a much quote unquote safer way relative to those gains. And yes, it's again one of those things where hindsight will always come back. And if you're right, you're like, I should have just stayed with the NQ. But the point here is that a great thing about futures is just the flexibility, where again, you get to trade the same chart. Because, okay, so example, here's the MNQ. Now I'm going to click to the NQ, and you'll notice the chart is basically the exact same. So here's the MNQ. There is the, and like I said, maybe there it is. So here's the NQ. There's the MNQ. So again, same chart, just different risk profile because, the way that they move. So I'm now going to try to get some trades here on the MNQ, but just show you how, yes, they're not going to add up as much, but it's all about risk management at the end of the day. And that's one of the nice built-in things about futures is the way they allow you to manage risk. So on that note, I will try a long if it wants to come back up here, and I can, there we go. So let's see if it wants to come down a little bit more. It did kind of, sort of. Stop is that red line right there. So not looking so good now, but maybe it wants to recover back up and out there. So notice on that one, I'm very glad that I was on the micros, right? Because that was a $168 loss. Had I bought on NQs, that would have been a much bigger loss. So that's an example there where, yeah, I actually feel really good about it. And watch this thing come right back up. Wouldn't that be funny? I'm going to try again. Okay, there we go. And there we go. So got a chunk back on that one, now down 78 on that one. Isn't that something? Came down, stopped me out, and then it decided to go. Well, at least I decided to jump back in there. But that is how the cookie crumbles sometimes. But all right, well, let's see what else I can find. But that is the general concept of things, is I'm now going to keep on trading, but just do so from a much more risk-controlled way. All right, I'm going to try a long right there, just starting very small. Somehow I did not get filled. Again, starting very small to give myself flexibility. Now as it bounces back up, try a short there. Again, just starting small. Blue line is my average. And again, I'm short, so I want to see prices go down. So there we go, another little scalp. We'll try again, just starting small on the short side here, as this thing does seem to have quite a downwards pressure behind it now, but like I said, I want to see a little bounce a little bit more before I think about getting short on it. So if this thing is just going to continue to go straight down, well, then I will just miss the trade. It'll be one of those it is what it is situations. All of a sudden, just kind of getting stuck here. All right, I'll pause. All right, here is the bounce. Now, if this thing goes straight up, I'm going to be in some pain. I don't think it'll go V-shaped straight up, but if it does, like I said, that will not be a very pleasant experience. So I'll throw my first order right there. Again, starting very small. So if it hits this red line and comes straight back down, I will regret. Look at that. Hit it. Did not fill me, though. I'm going to go up higher now at this point. Come down. Let's see. Let's push back up. In. And just one. Okay, so like right there, for example, bummer. Only had one contract. It's about to come back down. Get it more aggressive. There we go. And just like that, I am now in the green on those contracts. So going back to that first trade, is it fun to have a losing trade? It's not. It's not. I'm not sure it ever like feels good. I'm not sure. Maybe for some, like they literally feel nothing. Like they're just so battle hardened and they're just so callous at a loss. They feel absolutely nothing. I don't know if it's possible to get to that point. Maybe it is. Not for me. I mean, I've definitely improved, but my point here is it fun to take a loss? No, not fun to take a loss. But is it valuable to just cut the loser, keep it small? Yeah. I mean, I'm now, not only is that loss gone, I'm actually up in the green. So at the end of the day, yeah, sometimes if you're undisciplined, the market will bail you out. I can't refute that. But there are those times where the market does not bail you out, and it can get it can be very painful. And anybody that has experience, I'm sure you've been there before. Wow. Yeah, what a day. Yeah, I'm not sure really what I mean. To short right now seems like a total chase. To go long right now is pretty scary. That just seems like you're buying into a nasty, nasty potential falling knife that is what is going to drop down even further. So yeah. I'll try a short. Like I said, if it wants to bounce up some, give it a little bit of a reprieve here. Just starting very small. In there for my first one. So out there again, in hindsight, darn it, why did I start so small? But had I needed the flexibility, I would have been glad that I started very small. Where are we at? How about 9 minutes? Okay. Well, you know what? I keep forgetting that I technically, it doesn't seem like I did that much, but that's because I had already made some trades already. But we're almost at 10 minutes. And really, in all actuality, two very important learning lessons. The second one was not planned. But again, the first one, great thing about futures, you can keep on trading, which is a desire, right? We're traders. We like to trade. It is enjoyable to trade. But with the futures, you can keep on trading, but in much quote unquote safer ways, just based off of, like I explained, with those micro contracts, they're not going to, gains aren't going to add up, but the losses will be more in your favor. And then the second key lesson here is just cut the loss. Cut the loss. Not fun. Not fun. And sure, it may ultimately have worked out in your favor anyways, but that's a terrible habit to build because there's going to be a point where the market does not bail out your bad habits. And then that's where things get really, really nasty in a hurry. But if you just cut the loss, keep it manageable, then you give yourself a fighting chance to not only get back to green or to wipe away the loss, but potentially go to green. And I don't think anybody here was impressed by the type of trading I did, which is the other point is when you find yourself not needing to trade like a superhero to get back your losses, that's a good sign that you kept your loss small. There was no superhero trading here. There was nothing crazy going on, but yet I was still able to wipe away the loss and get back to green. So again, if you put yourself in a spot where you now need to trade like a superhero in order to wipe away the loss, that's probably a good sign that your loss was just developed by very, very poor risk management or rule breaks or something of that. But if you find yourself needing to trade kind of like I did, just kind of like blah, and yet that kind of blah trading still brings you back to green, that is a good sign in the risk management department. So yeah, 2 very, very important lessons here. Maybe that'll be the title of this video. Before I go, though, I do want to personally invite you to get signed up for this free live online webinar that I'm offering. So if you are a beginner trader or maybe struggling, then I'm very confident this class will give you some things to think about and consider in your journey in a very beneficial way. If you're a battle-hardened veteran with a rock-solid strategy, you're welcome to attend, but are you going to walk away with any sort of value? I mean, maybe, but my confidence level isn't nearly as high as if you are a beginner trader or just struggling within your trading journey. So like I said, if you're in those first 2 categories, definitely get signed up for it. Go to claytrader.com/live, or just check out the link in the description area to learn when the next live class is. So thanks for hanging out. Make sure you hit that like button.